So 2016 was certainly one of the more interesting years in an investment career. And one of the lessons, I guess, that fund managers had relearned in 2016 is that it's pretty much impossible to try and predict macroeconomic events. Now, I say that because almost everybody that I spoke to in 2016 thought that the vote in the UK would not be for leaving the European Union but remaining, and yet it was Brexit that prevailed. The second interesting event was not too many people in the run-up to the US election thought that Trump would become the president, yet he did. And possibly the most interesting part of that is even those that thought that he might become president thought that markets would fall quite sharply if he did become the president. We all now know that there was a very sharp rally after it became clear that Trump was going to be in the White House for the next 4 years. For Denker's global funds, there are two themes that we think we can exploit in a market that has run quite hard. The first one would be for financial stocks, where we see, even though we've had a bit of a rally in December, that in general financial stocks are still quite beaten up post the financial crisis. And for instance, the Best Ideas Fund is overweight in that particular sector. The other area where we feel that our stock picking can work well is in emerging markets, and therefore our emerging market funds also have companies in them that still look pretty cheap. From a geographic perspective, we are in certainly the Best Ideas Fund overweight to any real extent only in the United Kingdom. Why is that? That is because you always find bargains where news has seemed to be bad. So after Brexit, we have seen many bargains that are still not properly priced in our minds in the United Kingdom, and therefore we have an overweight position there. So where does this leave us after the political and economic events of 2016? Well, markets have rallied quite sharply now. And if you look only back over the last 5 years, markets are up a good 70%, the global market. Earnings, on the other hand, have only grown by about 5%. Now, we all know that in the long run, prices should follow earnings, and therefore markets look a little bit stretched to us. And that means that we have to be even more careful about our bottom-up stock picking and look for bargains where we can find them.